You're tuned to Radio Kidnappers, the voice of Hawke's Bay. This is the program called Real Wealth, and it's our pleasure as always, and for the first time this year, to have in the studio Trudi from the Stewart Group in Hastings. Happy New Year, Trudi.
Happy New Year to you too, Ken.
Can you believe it? Back at work already, 2019, half a month gone.
Oh, stop. I feel behind already.
You're chatting around and you find your life is slipping away, don't you?
Yeah, true.
And of course, we're talking today because you're a specialist in insurance. So we're going to have a look at insurance and how often and why we should review our personal insurance. Why should we do that?
Well, I thought we'd talk about it today because it's the beginning of the year, and I don't know about you, but a lot of us have these ideas about what we want to get sorted out, which we never got sorted out last year, and start with a clean slate kind of thing. Mm-hmm. So I would say to review your insurance regularly, either yearly or perhaps every 2 years, unless there's something that's sort of changed in your life. And this is where it's handy having an advisor to kind of prompt you and ask you these questions, because often I'll say to clients, well, has anything changed? And they'll go, no. And I'll say, what about your mortgage? Have you paid any? Oh, well, actually, yeah, we have. We've taken out a bit of an extra mortgage because we've redone our kitchen. Mm-hmm. So straight away, there are things that impact on the insurance that you have.
Sadly, because unless you have got an advisor, someone like yourself, it's the sort of thing we tend to do once, and then I guess a lot of people forget about it.
Well, because you think you've done it.
Yeah.
But that would be a little bit like having breakfast and saying, that's it. I never need to eat again.
Right. But it is the sort of thing we tend not to worry about, isn't it? We do it once, like if you get life insurance and you take it out and it's worth $250,000, when you take it out, you think in your head, I've got $250,000
insurance.
Policy.
I think generally what people, they don't even remember that. They just know, I've got insurance. And they come to us a lot of the time saying, I know I'm covered. They don't know exactly what they've got. And as you said, if it's sort of 15 years has passed, how relevant is it still to their lives?
Okay, what does a review actually involve? What does it mean?
Well, you come in and you sit down, have a chat with me. It would mean having a nice cup of coffee or tea to start with, icebreaker, and then we just run through the covers that you have. And I would ask questions and find out more about you in terms of debt levels, mortgage, rent, children, your hopes and dreams, aspirations for the future, work, that kind of thing. And then we would look at what you have and whether it's still appropriate going forward. And if you have nothing, then that's even easier in some ways.
Is a 12-month checkup recommended, or would you do it every 3 or 4 or 5 or 10 years?
Certainly 10 years is too long. Sometimes a couple of years is fine. I mean, it can just be something as simple as a 10-minute phone call. If you've been reviewed regularly before, then with our clients, sometimes I'll have a chat on them with the phone and kind of run through things because we have a bit of a history already logged. So, there's no one-size-fits-all.
Yeah, that's right. What's the likely cost to be for a bit of a chat with you?
It's free of charge.
Wow,
yeah.
We love that. We're free.
Yeah, we love free. How often does that happen? Yeah.
Okay, and I guess, what are we going to talk about? I guess you would talk to different people about different things. So an old guy like me, for instance, you'd probably talk to me completely differently to what you might talk to someone who's 30 years old, just starting off in life.
Well, your needs would be different. So your cover needs would be different. Perhaps your children are growing, if you have children, and your future may be looking a little bit different, and your dependents and your how much money you've got in the bank opposed to how much debt you've got would probably be a bit different. So we do look at sort of the same things for everybody, knowing that they're different for each, so therefore the needs will be different.
What would you recommend to someone, for instance, who might be asset rich, like have a house that might be worth, I don't know, let's pluck a figure, $1 million, but they haven't got any money in the bank, and they've got, I guess, basic life insurances and whatnot. What would you recommend to someone like that?
Well, if we were assuming that they had children and paid perhaps a mortgage, then you'd be looking to cover their income if they were unable to work. you'd be looking at having enough life insurance to repay debt and leave money for the family. Again, if they're an income earner, you lose that as well. I mean, it would be a lovely position to be in if you were to be the sort of the survivor of someone that passes away, to have a debt-free home, so that going forward the pressure on you to earn an income isn't so much if you've got a young family.
Would you recommend that we review our life cover on a more regular basis as we get through stages in our life? So, I mean, if we're working, we've got a wife, we've got a family, we've got a mortgage. Obviously, life cover is important for those reasons that you've just outlined. But once you get more comfortable, you might have paid off your mortgage. How important is it to maintain high life cover, for instance?
It's actually a really good question. Yeah, it decreases. The need decreases definitely as your debt decreases, as your children don't need you financially quite so much, and so you can decrease it. And of course, it gets more expensive. So you don't need to keep that same level that you've perhaps put in place at the age of 30. When you're 50 or 60, your need changes hugely.
I wonder though, I think I've used myself as an example when we've talked to you before about life insurance, that I took a policy out many moons ago, and I think at that time I was probably going to pay out, let's pluck a figure, let's say it was going to pay out $125,000. Well, that policy now, I'm just paying the same amount. That policy now is only going to pay out $25,000.
Yes.
So I guess my wife is hoping that I die before her.
She wants to get your money's worth.
She wants to get the money. That's right. But perhaps she might be thinking, wow, $25,000. If I want to stay where I am, and once I exhaust the savings in a bank, that's not a lot of money. So at my age, would I be considering saying, okay, well, maybe I need $100,000 worth of life cover? Is that a good way to look at it? Or?
Well, that is one way to look at it, definitely. I mean, there are other options. There could be perhaps somebody might decide to downsize their house, so that releases some equity. But yes, you could look to put on more life insurance on your life. There are a lot of options out there, and there isn't, again, just one, but yeah, that's one of them.
There's no such thing as one size fits all.
I know. There's so much grey area. Yeah. And again, this is why I think it must be quite difficult for people trying to figure it out themselves, because you kind of need somebody to give you some options. Otherwise, you would just think, oh, well, I'll just have to do this, or I just have to do that. Whereas there are as many options as there are sort of situations.
Is it important for both spouses to have life cover?
Generally speaking, I think so, yes. Traditionally, or many years ago, I mean, this has changed a lot, perhaps where a lot of times it was the male was the main income earner, a lot of emphasis was put on covering them, of course, forgetting the fact that perhaps the mother may be at home, and you'd have to, if anything happened to her, you'd have to pay somebody for childcare. So there's always a need for both. With a young family.
What happens when you take out a life policy? Who owns that policy? Do I own it, or do my heirs own it, or?
Well, quite often with a couple, say if they both had life insurance, depending again on circumstances, blended families kind of change that often. Then you would look at having a joint ownership. So whoever kind of went first would leave the other one owning their own life cover. The other benefit of that, of course, is that it's paid out. The claim is paid directly to the survivor or whoever that is the policy owner, which bypasses the need to go through probate.
How important is it to look at who's going to be the beneficiary? I mean, let's for example, use the fact that there's a couple who are married. In his will, he leaves everything to his wife, and he names her. And then they split up, and no one looks at changing anything. Is that a dangerous territory to be in?
We've had that happen not that long ago, and it causes all sorts of problems where the wills don't reflect the change in circumstances, and it's a legal document, so it's not really, you can't go along and say, well, yeah, but he did write that, but of course that was 10 years ago, and now this is what he really meant. It's done. And that's why people have wills, is so that it's written down, and you need to regularly review things like, is your executor still alive or still in your life? Who's going to be looking after your will? Do you still want your money to go to that person or this person? It can get quite messy. And again, the whole point of putting these things in place is to make it easy for your family, not more difficult.
How important is that will? How important is it to have a will full stop? I mean, you might say, oh, well, it's all going to be sorted out by someone.
Well, yeah, I mean, I guess you could take that attitude because you're not here. A lot of people, and myself included, I must say I only had a will probably done about 10 years ago. I never gave it any thought. And then when you start thinking about your family, and the older you get, the more you think about it, is trying to figure it all out. What goes where? What did that person actually want? Also, how do I pay for a funeral? Things like that. It's nice to have all that figured out for them, because they're the ones obviously going to be grieving for you.
Indeed. Now, I know that you're an insurance expert, and maybe this question is out of left field for you, but how rock solid is a will, do you know? I mean, if I left everything to, say, this person, but that person said, hang on a minute, yeah, I should be getting a share of that.
There are things where, and I am no expert, so I couldn't properly advise you, but I know there are where if you've left a family member out of the will where they may feel they have a claim, then you do hear it, that people then go in and claim and contest the will. And I imagine a lawyer would be able to advise you on how to avoid that.
Yeah. Of course, I knew you'd know the answers. Now, insurance changes all the time, and it changes, I guess, because insurance companies are changing themselves, aren't they?
They're evolving.
Yeah. Is that a good thing or a bad thing for a punter? Do we need to be more aware of what's actually going on in the world?
I think generally speaking, it's really good, because they're all improvements. They're improving policy wording or what they cover, or adding in something that hasn't been there before or available before, because an insurer sees a need. So it is a good thing. Again, this is where an advisor is really helpful. They can look at your policy and wonder why something perhaps is say 20 years old and it's since improved policy wording, and if you can change to another insurer sometimes. I mean, there obviously has to be a caveat that you have to be really careful to get as good an offer as you had previously.
As you get older and you decide that you might want to change your insurance provider, is it tough to do that? Because, I guess, who would want to take on a risk like me, for instance? Going to take one month, my God.
You can't see Ked looks very fit and healthy, don't believe this.
But does that become a problem there, that, if you're with someone, you've been with someone for a lot of years, they almost have it's not like a contract to stay with you, don't they, really?
Well, I mean, I guess it would be the same at any age, but I think it's more pertinent as we get older that we might have more of a medical history that might have happened since we took out our insurance that might inhibit the offer of terms that we would get from another insurer. So you would want to kind of check, if something's happened since you were 30, between the ages of 30 and 60, it might have an impact. So you might be best to stay with the insurer that you're already with. And also sometimes the rates that you're on with an older insurer, premium might be sometimes a lot better.
Absolutely. And you've mentioned many times in the past that when we're talking to an insurance provider, or even talking to yourself, and you're going to get some, give us some advice, that disclosure is very important, isn't it?
Yeah, it's key. Just answer yes to everything, everything that's pertinent. And if in doubt, if you think, should I mention this, then do.
Sure. What's the worst thing that could happen if I didn't say, look, I forgot to tell you about that heart attack I had when I was 45 and now I'm 65. Is that a big deal?
Well, the worst thing that would happen, in my opinion, would be that you would die, and they would, the insurer would look at your claim and get medical information to show that non-disclosure, and then they would void your contract, so that the family who's waiting for this and banking on this payout don't get it.
Yeah.
And that would be the worst. It's always what's going to happen to your kind of family, isn't it?
Sure. When you're taking out life insurance these days, I remember taking out a life insurance policy when I was about 16 when I first started work.
Yes.
You had to have a medical. You had to take urine samples in and all that sort of stuff. Does they still do that? Or?
They do. Well, you don't have to automatically have a medical. They have what's called limits.
Mm-hmm.
So if you're over a certain amount, and they're quite high limits, but depending on your age, then you might have to have a urine test or a blood test or have your blood pressure taken. And quite often the insurer will facilitate all this. So it's just a question of going along to a path lab. They tend to pay for it all. So it's generally speaking with these applications, the same with the review. Your investment is your time. That's what it costs you. But financially, it's free.
What more could you want?
Exactly.
Before I get back to work, just remind our listeners, we want to come and see you or anyone at the Stewart Group for some financial advice, or in your case in particular, insurance. How do we get you? Where are you? And how do we make
we're based at, I have to think now, I've been away for 3 weeks. Where am I? 204 Karamu Road in Hastings, and our number is 878 8961.
Good on you, Trudi. As always, our pleasure. You look after yourself. We'll talk to you same time, same place next time.
Lovely. Thank you, Ken.